future and fellow investors, it's Mike with Talking Stocks, formerly DiamondHand StockPicks. I figured I'd have to change the name of the channel because I didn't want you guys to get too stuck on holding all of your stocks. Although it is good to be diamond hand on your growth stocks that you believe in. Me, I have a 3 to 5 year outlook on all my growth stocks, but it's also better to be well-rounded. Be able to explore your options, calls and your put options. There's a lot of money to be made in the stock market. You just need to get out there and explore it. I didn't want everybody to just get stuck on diamond handing everything because you're going to lose a lot of money that way. They say bears eat, bulls eat, and hogs get slaughtered. So you don't want to just hold everything. There's a lot of stocks out there we can make some quick money on, and that's what I'm kind of more interested in, and explaining to you guys, how to make some money that way. Growth stocks are awesome. 5 years down the line, when you look at your portfolio and it's doubled or tripled in value with all your growth stocks that you believe in, that you did your due diligence on, that's a wonderful thing. There's a lot of money to be made in the meantime. So that's why I changed the name. But moving on to today's video. Today's video is about Area Energy and Archaea Energy. It's a new SPAC. I know SPAC's a bad word these days, but this one's different. This one's, it's over-invested, overfunded. The pipe was overfunded really fast. So a lot of investors are trying to get into this one, and it's showing definitely by the stock price. I was going to get into it yesterday. I figured I better do some more D&D on it before I hopped into it. I'm regretting that a little bit. I'm a few dollars over now, and I'll show you that buy option I had yesterday that I canceled because it's not good to jump into anything before you do your due diligence. As exciting as this one was, I had to really investigate into it more. And this one's huge. These guys, between their assets and their income, they're already, worth hundreds of billions. And I think their SPAC, value is going to be 1.5, 1.7 at $10. So there's a lot of money to be made here. So I think you guys can like this one. So let's get right into it. Okay, today's ticker symbol is RICE. It is a SPAC, a special acquisition purpose company. Apologize for that. I know some of your feelings on SPACs aren't too good, but this one's special. Trust me, you're gonna like it. They're combining Area Energy and Archaea Energy into the industry-leading renewable gas platform. The companies combined are both proven and profitable businesses. Their estimated 2021 EBITDA is $65 million, which is expected to grow to $327 million in 2024. They're also expected to contract 60 to 70% of renewable natural gas volumes under 10 to 20 year fixed price arrangements with investment grade buyers. At $10 per share, the combined company's enterprise value of $1.15 billion implies a valuation multiple of 8.2 times their estimated 2022 EBITDA and their 3.5 times estimated 2024 EBITDA. I think they can beat that, and those are probably on the lower end. Rice Acquisition Corp. heavily oversubscribed and upsized pipe, obtained $300 million in commitments led by institutional investors. Oversubscribed means that investors were chomping at the bit to get in this. They know it's something special, they know it's important, they know it's needed, and they know it's valuable. Anytime you see investors fighting to get into something, it's usually good news. The unfortunate part is as soon as the stock launches, like it did yesterday, the price goes up, and I was expecting it to crash like the rest of the SPACs, and I actually had a call on it for 100 shares, and I couldn't pull the trigger because I can't buy stock without doing my due diligence, which is costing me about $3.50 at the present time making this video. But I don't jump into anything without researching it, and I've done a lot of research, and this article pretty much sums up the most of it out of the 15 or 20 articles I read and the research on the history of the companies. This one pretty much sums it up. It's a great one. It's by Business Wire, by the way, which is a Berkshire Hathaway company. So the Rice special acquisition purpose is for energy transition sector. Today, or yesterday rather, they announced the agreement to enter into a business combination with Area and Archaea Energy. It will create industry-leading renewable gas ring platform. I'm going to call it Ring. Ring, RNG, is renewable natural gas. So we'll call it the Ring platform. The combined company will be named Archaea Energy. With an experienced executive team comprised of leaders from Archaea and Area, the transaction is expected to close in the third quarter of 2021. It means the SPAC name will change in the third quarter of 2021. And then it will be listed under the New York Stock Exchange under the ticker symbol LFG. Early in their acquisition search, I identified landfill gas as the most RAC, said CEO Daniel Rice. It's free, it's there on the landfill gases, and they're not doing anything but creating carbons, CO2s, all bad stuff for the atmosphere, bad stuff for us. So actually capturing that would be good for the earth, and capturing that is going to be good for their business. It's pretty much free money. They just need to capture it. They became determined to create a leading ring platform, and they believe that bringing together Archaea and Area goes beyond that. They created a new paradigm in ring development. The combination of these companies' respective skills and assets instantly creates a proven technology-driven LFG developer that's operating at scale today with a deep inventory of highly economic, low-risk growth projects to meet the ever-growing ring demand. The combined company's industry leading growth is supported with innovative long-term fixed price offtake agreements to ensure it achieves its economic goals, while it's also helping customers achieve their long-term climate goals. This places Archaea on a short list of companies that can generate sustainable and compelling risk-adjusted returns while significantly reducing GHG emissions, which are bad for us and bad for the earth. Some of the highlights. Business combination is expected to create the industry-leading platform in the U.S. to capture and convert waste emissions from landfills and aerobic digesters into low-carbon ring electricity and green hydrogen. Area portfolio company funds managed by Infrastructure and Power Strategy of Ares Management is being acquired for $680 million and brings a comprehensive portfolio of operational LFG assets, best-in-class operating experience, and a deep inventory of greenfield LFG to ring projects and electric to RNG conversion. Archaea LLC is being acquired for $347 million and brings leading RNG ring technology professionals, a deep inventory of LFG to ring projects, including the world's largest ring plant currently under construction. So that would be the world's largest ring plant under construction, which is renewable gas and energy. An innovative commercial strategy, groundbreaking low-cost carbon sequestration and negative carbon LFG to green hydrogen development projects currently in the design stage. So they are also improving, they're expanding, and they're growing. They have a lot of assets, as I'll get to in a moment here, and they are making profits. But they're expanding, so they're looking to grow and grow and grow and grow, which usually makes the stock price grow and grow if all goes well. So this is what we're kind of hoping for here. Pro forma for the transaction, the combined company will have over $350 million of cash on the balance sheet, providing ample liquidity to fund its pipeline of development projects and bridging the combined company to free cash flow generation starting in 2023. So they're going to dump all their cash back into the business, which is a good thing as long as they're not putting it in their bank accounts. Archaea Energy, the combined company, is tackling one of the world's most important climate problems. That's why I say it's good for the universe, it's good for us. U.S. landfills are expected to grow from approximately 8 billion tons of waste in place of 2020 to 13 billion tons of waste per year by 2050. That's just horrible, which is expected to increase the LFG emissions from 1.9 in 2020 to 2.8 by 2050. Capturing these emissions comprised of 50% of methane and 35% of CO2 has the same environmental benefit as electrifying 75% of all United States passenger vehicles. It is that good for the environment. It's taking that much smog, that much pollution, that much methane, that much carbon dioxide out of our environment, which is going to help our ozone, it's going to help our trees, it's going to help us. So it's a great thing, on top of it being profitable. LFG has a very predictable 20 to 30 year production profile. That sounds great, 20 to 30 years out. To me, says stability. And when coupled with continued growth in the U.S. landfill waste for the next 20 to 30 years, more people, more waste, that's obvious, creates 40 to 60 years of unparalleled LFG feedstock visibility. There's no worries about will they go out of business in 5 or 10 years? Are they going to sell out? Is gas is going to, it's going to be harder to capture or create? No, this is a long-lasting thing. So for me, it feels a little bit safer. Do your own due diligence, but that's one of the things that excites me as well. And more effective in reversing the impacts of climate change, which is, some people think it's fake, some people think it's real. I believe the better we do for the earth and the planet, the longer it's going to last. Elon Musk, he's not trying to go to space because Earth's such a great place and it's going to last forever. The way, what we've done to it in the last 100 years, it's not sustainable. We have to start. We should have been doing things like this a long time ago, but hey, at least it's here now, and better late than never, hopefully. Anyways, that's my take on it. Area Energy is a market leader in North America, having developed and constructed over 50 projects in the last 25 years. So they've been doing this for a while. They're just now getting on a huge scale. Area is led by seasoned industry veterans. Richard DeGia, CEO, approximately 100 highly trained plant operators in the U.S., strong safety environmental track record. Era's 13 years of ownership through the internal project development, strategic consolidation of several of the largest and most experienced companies in the LFG to renewable energy space. So they're acquiring a lot of different companies in the space, and they're building one mega company, and that's what we're investing in, this huge mega company. Including landfill energy systems, innovative energy systems, and timberline energy. Andrew Pike, co-head of Era's infrastructure and power strategy, stated, with the combination of Archaea and Area, RAC has created a scaled and growth-oriented premier platform that will be guided by a seasoned management team and positioned for even greater success through the continued decarbonization of the natural gas grid. And it goes on to saying, how good they are, how good green hydrogen is. You can read this for yourselves. Like I said, it's from Business Wire, Berkshire Hathaway Company. It's just a lot of good stuff. There's one part that I did want to get to that I had highlighted, but I clicked off of it, of course. Here it is here. This is just another little piece of information that makes you kind of feel warm and fuzzy. As of December 31st, 2020, Era's management global platform, just Era's, not Archaea's, had approximately $197 billion of assets under management. So that's one part of the company with $197 billion in assets under management. So they're making money. They're dropping numbers, like $9 billion in capital and over 200 different infrastructures. They're dropping money right and left. They're trying to build this up, and with these two combined and the several entities that they've acquired throughout the years, this is going to be huge, and it's showing it's going to be huge. We'll go over here to Robinhood, and I will show you. I wanted to hop into it yesterday at 13. I actually wanted to make a buy before I looked at it, just because I kind of read into it and it seemed really good. But in this market, SPACs being one, and then companies IPOing, they usually go straight up, straight down, and even further. There's a lot of SPACs right now that are below the $10 mark. But this one here is kind of special. And I will show to you, I did have my my buy order on there for yesterday, and it didn't go through. It was for 13 limit price, and as soon as I made it, I canceled it. As you can see, it was canceled. I felt that this was a good company, but feeling something and knowing something are two different things, and I would never, ever, ever suggest that you feel a company is going to be good and just throw money into it blindly. I do feel a lot more comfortable about this company. I believe in this company. I believe in what they're doing. I know that the revenues are going to be there, and I know that helping this world it's huge, and that means more than anything to me about this company. And you know, I can appreciate that for, like I said, my children, my grandchildren, great-grandchildren, and so forth, future generations. We need to do a lot more of this, caring about the sustainability of the future of the earth. If we've been doing this the last 100 years, we'd be a way better situation. But like I said, the limit price didn't go through, so I'm going to set a new limit price. I'm hoping to get this thing, you know, back towards the 15 mark. Like I said, you don't see SPACs doing this, you know, the last couple of months since the big drop, you know, in February. So this is special. They're doing a lot of good things. It's a lot of big investors getting into this, and I think it's a good bet. I think it's a safe bet, and I think it's pretty much a sure win. I just wish I would have pulled the trigger, but you know, I'd rather know about what I'm investing in than make a couple quick bucks or lose a lot of quick bucks. So I do agree that this is an investable company. I'll be putting in a limit order for 15, maybe one for 16, a third of my money at 16, a third of my money at 15, and then I'm hoping this thing's going to give me, you know, a nice buy-in, you know, back down to the 13s would be great. I don't know though, because like I said, in this day and age right now in this bear market, this stock it's going the right direction if I was in it, but the wrong direction since I'm not. So hopefully this video did you guys some help here. This looks like a good one. This may be a DiamondHand stock, one that you hold on to for 3 to 5 years, and I could see this only growing and only getting stronger and only getting better and only helping out the world more and more. So I do invest in this one. I'm going to invest in this one. I trust the stock. I like it. I wanted it a little cheaper, but right now it just looks like cheap isn't an option. So, all right, guys, thanks for joining me on this one today. Do your due diligence. Check it out. I think it's worth investing in myself. I will be investing in it. If you love this stock, hold on tight with it. I believe 3 to 5 years, it'll pay off pretty good for us. And only invest in stocks you love. Do your research. It'll pay off. Don't just jump into them. This one, it seems like I should have jumped into it, but that's usually a sucker move, and you're going to lose 9 out of 10 times. So I think I played this one right. I just hope it comes down a little bit because I like it a lot. All right, guys. Don't forget to hit that like and subscribe button. I really appreciate it. It helps out the channel, and it makes me feel good about doing this research and posting these videos for you. Okay, you guys, safe travels, and we'll see you on the next one.